the best thing that could happen to Bitcoin is the volatility decreases a bit, but the correlations break down, because if it's an uncorrelated asset and it's a legitimate asset, then most of the financial world is underexposed, right? You've got $500 trillion of liquid financial assets floating around, and 0.1% of that is Bitcoin. So if it gets to be 1%, right, 2%, then it's going up by a factor of 10 or more.
According to Michael Saylor, executive chairman of MicroStrategy, Bitcoin, the biggest cryptocurrency in the world in which Saylor and his software company are substantially involved, is on a direct course to reaching 10 times its current price. Saylor claims that when investors eventually recognize the asset's numerous valuable attributes and start to invest in mass, Bitcoin will undoubtedly reach a price of 10. Saylor predicts that by that point, Bitcoin's portion of the $500 trillion in liquid financial assets will rise from the present 1% to 1 or perhaps 2%. Due to the restricted supply, a rise in the market capitalization of Bitcoin will drive up prices and raise investor interest in the digital currency. Saylor asserts that it won't be long until more investors reach the same decision that MicroStrategy did in August 2020, when they made the first $250 million Bitcoin buy. Saylor understood everything was about to change in the summer of 2020, when the globe was in a state of shock due to lockdowns, unrestricted money printing, and low interest rate conditions, and that his software company needed a sound investment instrument to weather the storm. It opted to invest in Bitcoin after carefully weighing the pros and disadvantages of various asset types, including commodities, bonds, and equities. Saylor claims that MicroStrategy chose Bitcoin because they viewed it as digital gold, possessing all the benefits of gold and more, with none of the drawbacks of precious metals. In addition to being rare, Bitcoin can be exchanged at light speed, has the attractiveness of a large tech network, and is a physical good. Saylor claims that, in contrast to the widely held belief, MicroStrategy's Bitcoin investment has been quite profitable. Since MicroStrategy's initial purchase, the leading crypto asset has increased by nearly 150%, while silver has decreased by 20%, bonds by 17%, and gold by 6%. These stock indices have performed better, but not as well as Bitcoin. Nasdaq has increased by 23% from August 2020, while S&P has increased by 29%. MicroStrategy has kept buying additional Bitcoin thanks to Saylor's strong confidence and unwavering faith in the potential of the cryptocurrency. A few days ago, Saylor tweeted about making yet another multi-million-dollar Bitcoin acquisition. His tweet states, MicroStrategy has acquired an additional 12,333 Bitcoin for about $347 million at an average price of $28,136 per Bitcoin. MicroStrategy currently owns 152,333 Bitcoin, with an average price of $29,668 per Bitcoin as of June 27, 2023. Now, as Michael Saylor explains his outlook and expectations for Bitcoin in the upcoming years, we'll show you snippets from his most recent interview with The Block. But before we go, would you kindly take a moment to like this video, subscribe to the channel, and enable post notifications for more content like this?
If we switch the focus just to the crypto industry as opposed to macroeconomics, and the last macroeconomic observation is that, interest rates did go to zero. They stayed at zero for 18 months, then they got jacked up to 500 basis points in 12 months. It started breaking the banks. It really crimped the commercial real estate industry, the residential real estate industry. It squeezed the equity markets. And now we're kind of like at this point where it's not clear, do they creep up a little bit or the interest rates to come back in? But I think we're at the end of that aggressive tightening cycle. And at some point, they're going to have to loosen monetary policy. So we're poised there. In the crypto industry, I think in general, the question is Bitcoin going to be banned, hacked, or copied? Right? It was the biggest crypto asset 3 years ago, but will it be banned? Will it be hacked? Will it be copied? That's the question for any investor. What happens next? There used to be a lot of Bitcoin skeptics. There were, there were the deniers. I talk about them. People that think Bitcoin is tulip bulbs and a Ponzi scheme. Peter Schiff being the most famous. The deniers are pretty much silenced now, right? I mean, they have fallen out of consensus. Bloomberg, New York Times, Wall Street Journal, CNBC, Congress, the SEC, the CFTC, the Treasury, all the central banks of the world, they all kind of acknowledge it's not tulip bulbs. It's a real asset. It's a digital commodity. So the deniers are out of the mainstream. Then you have the skeptics, like Bitcoin is a really good idea, but it's too good idea, so the government's going to ban it. And we had, Jamie Dimon said it, you've got other people that said it, Larry Fink once said, it's an index of money laundering. So the skeptics held the day for a while. But I think in the last 24 to 36 months, the skeptics have kind of fallen out of the mainstream as well, because you can't with a straight face go on CNBC and say Bitcoin's going to be banned when they've got the ticker in the lower right corner, and they've got the head of the SEC, the head of the CFTC, and the Secretary of the Treasury, and then Jerome Powell all saying, I think it's going to be around for a while. It's a real thing. So the skeptics don't really have much power. So now if it's an asset, you've got a bunch of investors, and maybe you love it, maybe you hate it. You're like, if you're an investor, you acknowledge it as an asset class, and you can either go long, go short, or trade the volatility. I think that you've seen a lot more investors coming into this space, and for a while they thought it was correlated to risk assets, and so they would short it to hedge their risk portfolio, right? And then they thought it was not correlated or negatively correlated, and so that view has evolved over time. But to your point, the best thing that could happen to Bitcoin is the volatility decreases a bit, but the correlations break down, because if it's an uncorrelated asset and it's a legitimate asset, then most of the financial world is underexposed, right? You've got $500 trillion of liquid financial assets floating around, and 0.1% of that is Bitcoin. So if it gets to be 1%, right, 2%, then it's going up by a factor of 10 or more. I think we'll get the uncorrelated, and how much volatility we get, it's unclear. But as more people adopt it, and as liquidity increases in the mainstream institutional investor market, I think the volatility will decrease and is decreasing. I mean, the last two investor classes are the technocrats. And this is a set of investors you want. They're the people that think Apple and Google and Amazon and Facebook and Microsoft are really powerful networks. And you can see the big winning stock ideas have been Microsoft, Apple, and Google. And the reason why is because they're more powerful than most nation states. It should be pretty clear to people right now that Apple has 1 billion users, and it would be easier for you to leave the United States of America and pick up your life elsewhere than it would be for you to leave the Apple ecosystem. And it's a very interesting idea, but if you're a tech investor, you could get behind that idea, and eventually just about everybody that got insanely wealthy over the past 20 or 30 years was a technocrat, really, if you think about it. And then eventually you get the Warren Buffetts and you get the Carl Icahns of the world that say, I don't know if I understand it, but it seems like a juggernaut, so I guess I'll buy $10 billion of it. And Warren Buffett made more money on Apple stock than he made in his entire life on everything else you've ever heard of. And he made that money faster. And so the technocrat, kind of wins over the mainstream investor. And Bitcoin is emerging as this dominant digital monetary network, or dominant digital commodity network, or you could call it dominant digital property network. The thing that's most controversial is currency. Currency is very controversial. Every nation state wants to control their own currency. Currency is a medium of exchange, and you could say it's a system of control, right? A medium of exchange, a unit of account, a store of value. But the fourth thing, the system of control, turns out to be really, really important. So digital currency networks are very controversial, and there's a lot of uncertainty. But on the other hand, owning property is not controversial. And If Bitcoin is digital gold, then there is no nation of gold with subpoena power that's going to attack you for taking away its monetary premium. And the same is true if Bitcoin is better investment than real estate. Well, you know, Congress and the Treasury and the FBI and FinCEN, they're not gonna take a lot of issue with the fact that you actually demonetize some commercial real estate by 2%. So Bitcoin is emerging as this digital property network, and it meets the use case of store of value. And all of the endorsements have made a huge difference. I mean, you've got 4 presidential candidates that have come out pro-Bitcoin. That's kind of like a chicken in every pot, and everybody deserves to own their own home. And if everyone has an entitlement to own their own home, and I'm going to launch Freddie Mac and Fannie Mae, and I'm going to make home mortgages cheap because every American deserves to own a home, what you get is a lot of money flowing into that asset class, the entire mortgage-backed security asset and real estate. And there's a reason real estate's gone up 7% a year in all these cities for the last 100 years. Right? Because it's a supported asset class. I think that Bitcoin is emerging as a supported asset class. If you've got the regulators endorsing it, Congress endorsing it, legislators endorsing it, you've got candidates endorsing it, then I think you've turned a corner. So I think we've turned a corner where you're either going to be an investor or a technocrat, or the last is maximalist. And
what do you think about their projections? In light of the present macro and regulatory landscape, do you believe they are practical? Please share your thoughts and views in the space provided below. Make sure to like this video, subscribe to the channel, and enable post alerts for more videos. Thank you for watching.